Today, China has once again come under the spotlight after a flood of statements and pledges from various financial officials. The People's Bank of China has finally taken concrete measures. As a result, the yuan has asserted its strength against the US dollar. However, Asian currencies gave a muted response to the news from China. Overall, Forex is currently more focused on events in the United States, the presidential election, and the Fed Reserve's interest rate decision. Unlike the European Central Bank, the Fed Reserve has the advantage of not needing to adjust its action to support the economy. The US economy remains on a sound footing. Yesterday's retail sales report showed growth beyond forecast. Retail sales increased from 0.1% in August to 0.4% in September. At the same time, a reduction in initial jobless claims by 19,000 last week indicates a robust labor market. However, the optimistic picture was slightly dampened by US industrial production data, which instead of the expected growth, saw a sharper decline from a minus 0.2% to minus 0.6%. Interestingly, the US dollar has ignored these downsides. Overall, its index has already gained more than 3% since late September. Its value against the six major currencies is on a track to close with gains for a third week in a row. The US dollar maintains the bullish momentum for several reasons. One of the main drivers of growth this month has been the Trump trade. This is because his presidential agenda promises a strong surge in inflation, which in turn could lead to a more aggressive Fed Reserve monetary policy. Thus, the US dollar will put pressure on its counterparts in the major pairs. As for its main rival, the single European currency found itself in a very unfavorable situation today with the potential for further weakness. Firstly, as expected, the European Central Bank cut its refinancing rate by 25 basis points yesterday. However, this move had already been priced in by traders and was not expected to have a significant impact on the euro. But the Eurozone's regulator still managed to surprise the markets. It was anticipated that after two consecutive rate cuts amid easing inflation, policymakers would take a pause. However, ECB President Christine Lagarde announced yesterday plans for another rate cut in December this year, once again by 25 basis points. This development came as a complete surprise to investors. The euro faced a fresh wave of sell-offs, extending its bearish momentum, trading today in the range of 1.2828 to 1.2851. Meanwhile, the US dollar is currently so overbought that the market is looking for any minor excuse for at least a local correction. For example, the rise in UK retail sales. The nearly 1.5% acceleration in retail sales allowed the British pound to reshuffle some positions among the currencies in the US dollar basket. As a result, the euro-dollar pair had a local correction. If this continues, the euro may attempt to test the technical resistance around 1.2865. However, after that, the euro is expected to reverse and continue its decline. The potential target remains the support level from early August around 1.0775. Besides, the euro-dollar pair may consolidate around the current levels, especially if economic reports from the US land hand to the euro. Today, markets will get to know data on the US housing market, new home construction, and the building permits. Forecasts indicate that both indicators are likely to show a decline. If that happens, the euro will have a chance to continue its correction. Moreover, by the end of the week, the euro-dollar pair could experience a burst in volatility, reacting to comments from several Fed Reserve policymakers. You can check the times of their speeches in our video traders calendar. And the odds are that these comments will agitate the markets as such as the statements from financial policymakers in Europe and Asia, particularly China. Today, Beijing has finally moved from words to action and launched two financing schemes to support the stock market. At the same time, all the activity in China this week points to a truly critical situation in the world's second largest economy. Curiously, oil prices did not react to the events in China. On the contrary, Brent crude declined today and consolidated within the range of 74.3 to 74.9. And this is most likely due to the strengthening of the US dollar. Overall, oil prices have been stagnating for almost a week, and this flat market is largely the result of a lack of changes in the Middle East. However, it's clear to everyone that tensions in the region are increasing and the situation could flare up at any moment. Additionally, the US dollar is currently heavily overbought and its correction could begin at any time. Therefore, oil prices will soon start to regain their position. The ruble remains in stagnation today. The Russian currency could remain trading sideways for some time, as it has done many times before. However, there are hints that changes could come quickly this time. Indeed, late last week, the ruble lost ground due to the fears on a halt in yuan trading on the Moscow exchange. In practice, trading went on as usual. When the Bank of Russia sharply limited the bank's ability to conduct swap operations, thereby signaling the risk of a reduced currency supply. As a result, the market has spent the last couple of days adjusting to the new reality, but now there is no alarming currency shortage. Therefore, the ruble could regain at least some of its recent losses, whilst investors are fully convinced that no significant changes have occurred on the exchange. However, this is likely to happen next week. So that's all for today. We monitor developments in financial markets. Subscribe to our channel and stay up to date with the latest news with us. We wish you profitable trading and have a nice weekend, and see you online on a Monday.